Holy flippity flip flop flappin' smokes everyone. What just happened over the past 2 days has never happened before. And boy have the past 2 days been absolutely crazy in the markets, but I'm going to go over in today's video what's really behind all the action. We got a lot of important news and data to get into, so let's not waste any time. Let's get straight into it. First things first, something we've got to talk about is the Dow Jones Industrial Average. Now, what has happened over the past 2 days with the Dow has never happened before. It's never had a 1,000 point decline and then rallied back. And also what happened again today is it was down 800 points, but then staged a massive comeback again. The S&P 500 though couldn't bring back its losses. It was down 1.22% today. And we continue to see pain in the Nasdaq, the high growth tech stocks. It was down 2.2% today, but it was down over 3% during the trading session. We're also starting to see crude oil rally again, which is going to be more inflation pressures for the Fed. But while everything is selling off, gold is still holding strong, up about 0.36% today. So even though it's not a huge gain, at least you're not losing 1 to 2% like in stocks. And we're starting to see a reversal in the 10-year US Treasury. And again, why we have to pay so close attention to this is because the higher interest rate goes up, this hurts stock prices, and it also means mortgage rates are going to go up. And for my crypto investors, Bitcoin is pretty flat at 36,500, but is holding up relatively strong compared with the Nasdaq high growth tech stocks. But again, going back to what's happened over the past 2 days, these record comebacks with the Dow Jones has never happened at this kind of level before. But what you're probably wanting to know is what's behind these massive swings. What I think is happening is Wall Street is playing chicken with the Fed, because Wall Street can't really ask the Fed not to lift interest rates and not to sell off the assets that they've been accumulating at a rapid pace. Remember, their balance sheet has more than doubled from $4 trillion to nearly $9 trillion. And analysts are expecting they're going to announce that they'll sell off $100 billion worth of assets every month starting in July. So while they can't ask them not to lift interest rates and not to tighten, what they can do is send them a message. And so what I think's behind these big swings over these past 2 days, right as the Federal Reserve is meeting, it's to get their attention. Wall Street is telling the Federal Reserve, remember who's in charge of the stock market. And what they're doing and what they're saying is they're flexing and they're saying, just remember, we can crash these markets anytime we want. Because the Federal Reserve says that their mandate is full employment and price stability. But people, the real reason the Federal Reserve was created in 1913 was because there was so much financial instability and there was so much run on the banks. And now with the stock market more than 200% of GDP, the Federal Reserve doesn't want to admit it, but they use the stock market as a way to create economic growth. Because the stock market goes up, everyone feels wealthier, people's retirements go up, and they're more likely to spend. But when the stock market crashes and trillions of dollars of wealth is wiped out in just a matter of weeks, well then that has the opposite of the wealth effect and people are likely to spend less and less, and that's going to lead to lower economic growth, like we've just got some huge breaking news from the IMF. Let's have a look, everyone. Look at this. The IMF cuts its 2022 World Economic Growth forecast to 4.4% on weaker US and China outlooks. And like I've been covering on the channel, everyone, it seems like every single month these growth forecasts are getting slashed lower and lower. The US was downgraded on Biden's agenda setback and China on the real estate crisis that is going on. And of course, they say nobody saw this coming, but inflation is expected to persist for longer than previously seen. But listen to how big of a reduction they're slashing growth for the US. The fund slashes its forecast for growth in the US by a massive 1.2 percentage points to just 4%. And the reason they're slashing these forecasts is because of the huge amount of stimulus that got taken away from Joe Biden's Build Back Better plan, the Federal Reserve stopping quantitative easing and lifting interest rates, and also the continued supply chain bottlenecks, which aren't expected to be eased anytime soon. But what you're probably wanting to know is, okay, what does all this economic jargon mean in simple terms? What this simply means is Wall Street doesn't want the Federal Reserve to tighten, and they're trying to crash the markets to stop them from saying they're going to lift interest rates, or at least cut the amount of interest rate hikes they're going to do. Also, what this means is the Federal Reserve is going to go into a tightening cycle and hiking interest rates right when the economy is about to fall off a cliff. And simple fundamentals with the stock market, when the economy slows, companies' earnings slow, companies' profit margins slow, and with valuations already at historic highs, we still have a long way to go before the stock market reaches fair value for the indexes. So everyone, is going to be all eyes on the Federal Reserve tomorrow, but don't worry, I'll bring you the information sooner than anyone else. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.